So we are at something of a crossroads, given recent developments across the Atlantic. You were here with us last year, for which we thank you for coming back. And the picture looked a little different. But broadly speaking, the work you do at the Energy Transition Commission and beyond, really, you're looking at a 50, 100-year view of the future, not 1 year to the next or one political cycle to the next. How do you take on board what many of us in this room see as sort of an existential transformation happening in the U.S. and put it in the perspective of the broader trends? What should one make of the Trump moment?
The way I sum up our current situation in terms of the energy transition is emissions, concentrations of gases and temperature really, really bad, right? I mean, we are not turning the curve on concentrations. The temperature went above 1.5 degrees centigrade above pre-industrial levels last year. Technologies far, far, far better than I dreamed was possible 10 years ago. And politics in the US, absolutely awful. So you've got to navigate with all of that in mind. The technological story is hugely important because it will be there even when the politics has gone away. We are seeing extraordinary falls in the cost of solar PV and batteries in particular. And I think we have not yet woken up to just how transformational the combination of solar plus batteries is going to be. And if I could applaud, I don't need to do this. I haven't been prompted to do this, but the Economist magazine on June the 21st last year, which was the northern summer solstice,
Indeed, our
devoted. You did an entire edition called "The Dawn of the Solar Age," and I think that is actually right. Most of the population of the world does not live in these windy, cold places where we do. They live in a sun belt where the dominant source of technology is going to be solar PV. Batteries plus solar PV enable you to deliver round-the-clock electricity in those environments, and that's going to be transformational. So that's there.
Yeah.
It's huge. But the politics of the US is terrible. In my gut, over the last 3 months, there's no particular science to this, but I've increased by about 0.2 degrees centigrade my subjective feel as to what is the lowest temperature that we could possibly get to. You know, if I previously thought we're not going to meet 1.5, but we might limit at 1.6, I'm now at 1.8. Entirely because of the election of Donald Trump.
So a slowing of the energy transition in America.
There will be a slowing of the transition. And it isn't just the 15% of emissions which are American, which will not now achieve the 50 to 52% reduction versus 2005, which was in their NDC.
Right.
It's switching off America as a major driver of clean technology development alongside China. And I think that creates a challenge for Europe. We should be a developer of clean technology alongside China. But at the moment, we're very dependent on China.
Well, you mentioned China. Let's spend a minute on that because I know you think a lot about China. The examples you gave of solar, of batteries, and we could extend it to EVs. We could go on to various grid technologies. There's been, obviously, and everyone knows this, more solar was installed in China, solar PV last year than by all countries in all of human history. The collapse in prices of batteries, grid-scale batteries, is extraordinary. More has achieved in the last 5 years than in 15 or 20 in solar. So these sorts of statistics come together in an interesting way. The flywheel effect is picking up, but we do see tariffs in the U.S., for example. Particularly, we see some in Europe, a push back on this and a nervousness, geopolitical concerns about reliance on China. How does one make sense of this? If the energy transition is as important as certainly your work indicates, and many people in this room think, that this source of phenomenal innovation of affordable and excellent quality clean energy products being blocked out due to various reasons, some legitimate, some perhaps to do with protectionism or cronyism, doesn't it inevitably throw sand in the works of the energy transition?
It could, and the IEA have very clearly set out analysis of how much it could slow down the energy transition. I think there's a few things to say about this. First of all, we've got to have a clear understanding of why China is ahead in these technologies. Initially, it may have been low labor cost, but labor cost is irrelevant. These factories, battery factories employ very few people. They are deeply, deeply automated environments. Labor cost is not important. Initially, there were probably lower environmental standards, but the major Chinese producers are cleaning up their environmental standards very rapidly. This is a classic industrial cluster effect where you have ecosystems of the whole supply chain of everything you need to produce solar PV or batteries through to the cathodes, the underlying chemistry, the cathodes, the anodes, the electrolyte, not just the final assembly. In all of these technologies, you have these hugely integrated supply chains with each bit of it at scale, delivering economy of scale and learning curve effects, and with technological leadership. That's what's going on, and it's a fundamental breakthrough. What should we do? In Europe, I think we should aim to have some of these supply chains in Europe. I don't think we should aim for 100% autarky. That's ridiculous. But I think, for instance, the objectives which the EU set out to maybe have 50% of key supplies coming from Europe is not a crazy objective. To get there, I would suggest the following things. One, prefer time-limited subsidies and good regulation to tariffs. Two, if you have tariffs, base them on WTO rules which look through to whether there is a current level of subsidy rather than just pluck them out of the air in the way that the US has done. And broadly speaking, I think that the EU's tariffs on electric vehicles last year were broadly speaking in line with that principle. They were significant, but they weren't intended to keep these companies out of the market forever. Interesting that on the day they announced them, the BYD share price went up because, a brilliant company could deal with that level of tariffs. And then third, and this may be controversial, but at the ETC, we tend to think that location matters, not ownership, and that we should be encouraging brilliant Chinese companies to invest here in Europe. Let's take, for instance, the Stellantis-CATL joint venture, which has just been announced for Spain. Back in the 1990s, China was behind Europe and the US in a whole range of technologies. What was one of its key policy levers to catch up? It was the encouragement of inward investment, combined with local content requirements, sometimes requiring that local investment to be in joint ventures rather than 100%. But there are intelligent ways of encouraging inward investment, which should be a key part of a strategy of catching up and enabling Europe, it is in some sectors already, Europe already to be part of this whole clean technology revolution as well as China.
Let's get the lights up and see if there's one or two questions for Lord Turner. In the meanwhile, let me ask the follow-on question. That is, how do you prevent the next Northvolt, or in the US, Solyndra, that is picking winners, national champions, and going awry?
Well, I think what Northvolt illustrates is that it is very difficult to build a battery business de novo. And I better declare an interest here. I am on the board of a company called ASC, which is a Japanese headquartered company, 10% owned by Nissan, but it is also 70% owned by Envision, which is a Chinese company. So I need to say that. But from that experience, I know that the easiest way to build a battery business is rather like yogurt, is to start with a battery business. Because it means that when you make a commitment to an automotive company and you have to prove that you can do what you can say with all your samples, you've already got some battery factories there to run the samples out of.
Right.
And when you open a new factory, you're benchmarking it against what you're doing in the existing factory. Now, this is often the case. Sometimes it's just inherently difficult to break through in a brand new fashion. Northvolt, I thought, had a reasonable chance of success, far more, I have to say, than British Volt, because it actually got to the stage of having some serious customers. But the interesting thing about Northvolt was, as I understand it, it wasn't about getting the customer commitments. It was actually about industrializing. It was actually about
the actual management choices
delivering it. So I was quite surprised that they didn't manage to do it. But as I say, the easier way to do this is to start with a battery factory that you've got and then build another one, because you're benchmarking against what you've got already.
Let's go to a question here. Make it a good one. Identify yourself, sir.
Hi there. Steve Dagg from Datamoran. This morning we heard about moving from drill baby drill to build baby build, and the sense that I got was there's still a message to kind of move fast and break things. And I wondered how, when you hear about build baby build, how do you reconcile that with the biodiversity loss and the nature loss that we face? And is there a case for restore baby restore?
Yeah, I'm a little bit careful, wary of the rhetoric of build baby build, which has broken out, in this country, and it can be, oversimplified. I sometimes feel that, we've got some politicians who feel I'm going to prove that I'm even more anti-newt than the next person. Newts are not getting in the way of my building program. Look, we clearly do need to reform our planning processes. I mean, I was reading the other day about this new idea for a Kent Lower Thames crossing, where £120 million has been absorbed in design fees, dispute fees, legal fees, before a single thing has been built. And we do seem to have created processes which are just sort of proliferation of the opportunity to argue and lawyers earn money rather than getting on with it. So there is clearly a huge opportunity, and we set it out in a report we did last year on the offshore wind industry. There's an opportunity to speed the processes of building without in any way relaxing the environmental standards that you're applying. So that when you do offshore wind, you should be looking at, the situation in relation to birds. On the whole, offshore wind developments in general are completely compatible with preservation of our bird species. You just have to be sensible about the siting and the particular migration routes, etc. But what we're doing on offshore wind in the past, where it's been taking 11 years from start of an idea to delivery, is we're doing things in sequence. Right? You do the first step of the analysis, then you do this next step of analysis. We're not doing intelligent things like parallel running. So I think there is actually a huge opportunity to just get better and better at planning processes to speed up speed without changing the environmental standards. Having said that, I wonder whether we are overdoing some environmental standards. I believe it is the case that the HS2 train bat tunnel is going to cost 100 million. Now, God, I hope these bats enjoy it. I mean, because that is a pretty expensive bat tunnel.
A very quick question and a quick answer. We're just out of time.
Yes, Jeffrey Smith, Stout. I was one of the first bankers at UK Infrastructure Bank as well. Oh. Role of government in financing the green transition. Should it do more to pick winners, or should it get out of the way and allow the market to choose the winners?
I think it's a mix. I think a lot of things are best financed by the private sector. And I think a lot of things can be done by the private sector. I think as long as you have good planning regimes and a good auction regime, we don't need UK Infrastructure Bank to be a big developer of, for instance, offshore wind projects. We know how to do those, and the cost of capital is low enough. But I think there is a significant role for public finance to do the things that, the private sector won't do. First of a kind developments of first of a kind technologies. It may be that some of the the things that we need to do in new forms of storage may be good for them to do a first of a kind development. There are all sorts of extraordinary bottlenecks, incredibly defined bottlenecks in the development of grids. For instance, there's a shortage of cable for long-distance DC ultra-high voltage lines. There's a shortage of transformers. I think what you want is your public finance group, whether it be EIB, UKIB, to be deliberately saying, where might there be the bottlenecks where at the moment I'm seeing the private sector not doing it fast enough? That's where I'm going to focus my attention. That's the overall approach I think we need.
That's great. Practical and yet also long-term vision. Thank you, Lord Turner. We appreciate you. Don't forget your valise. Okay. Good to see you. And you've set us up very well for our expert panel. So I invite our experts on stage. We have Christopher Kosloski, VP from FM Renewable Energy, Bernice Lee, Senior Advisor at Chatham House, and Heather Zichal, Global Head of Sustainability at JPMorgan Chase. Please give them a nice round of applause. Welcome them on stage. Well, Lord Turner's always a hard act to follow, but I've got the right team here, the dream team, to help us decipher the meaning of the nostrums that he laid on us. Maybe I'll start with you, Bernice. If since very rarely you're here under not Chatham House rule, but under Economist rule, with the world watching. When we think about financing the energy transition, the topic of our session, what comes to your mind first as a provocative, fresh way to think about the challenge?
Well, to be honest with you, you and Adair come to mind first. But apart from that, nowadays, I always often ask myself, what do Leamington Spa, the Pacific Palisades, Valencia have in common? We are looking at countries and areas, streets where you're no longer insurable. So I think about how do we make sure that all the untapped potential that comes out of this business could be used for better use.
So you really see this as an insurance challenge or a lack of insurance challenge, is it?
Well, I think ultimately it is about how do we invest not just in risk mitigation, but actually really ultimately reducing them properly, or risk transfer rather, so that we are actually reducing the kind of work that needs to be done by the type that Adair just talked about.
So, I mean, the intellectual case you make is elegant, right? And insurance is a means of transferring risk, of pooling risk, and we should see a lot more attention paid to this. But in practice, I'll give you a small anecdote. Having for my sins, having covered this area for a very long time, I used to go to COP summits 20 years ago. I was in The Hague when the U.S. Negotiator had a pie thrown in his face. Frank Loy, I was standing right next to him. He still tastes the custard from the pie because the U.S. was advocating evil things known as market-based instruments, emissions trading. And so the deal fell apart. And once the U.S. left, of course, the Europeans said, wait a minute, we can't do this without flexibility mechanisms. And Europe became a pioneer in those instruments. And I give that anecdote because at those early COP meetings, one of the only business organizations or associations that would come would be the insurers, and in particular, the reinsurers, Swiss Re, Munich Re. They would come. You could tell by the sharp suits. They would have a press conference. They would lay down their 100-year scenarios, 50-year scenarios. They say, look, we can see the future, the risks of climate change. Bear in mind, this is over 20 years ago. And they already saw the risks coming because they're going to be left holding the bag as reinsurers. They said, we must act. It's very important. And then they would pack up their bags and leave. You'd never see them again, unlike the oil industry lobbyists who would stay and they would make sure to influence the outcomes and be seen coming in and out of the national offices of the negotiators. And so the insurance industry has had this odd role where they're conceptually correct. We need insurance, we need reinsurance, and yet somehow is in some ways the ghost at the banquet is missing. And we're noticing insurance more and more because some of these places you mentioned, including in LA, are becoming uninsurable, meaning the industry is retreating, and maybe the governments are left holding the bag. So I just want to press on this just a little bit more, and I welcome comments from either of you also on the panel. What do we do about this? You identified something elegant and important, but the behavior of the insurance industry does not seem to be stepping up to the challenge.
Well, thank you. There are a couple of things. One is I often think about what happened in the 19th century. You've got the earthquakes in San Francisco, the fire in Chicago, Tokyo. What happened after that in the earthquake and the fire is that insurance companies realized that there's nothing for them to insure if their losses are too big. They can't make money. So what they ended up doing is to actually co-invest with cities, governments in the prevention. They co-invest in, for example, fire station building, fire hydrants, fire alarms, regulations follow suit. And thereby we created markets and they invest in the market to create for themselves as well as for safety of others. So right now we're in the same situation again where we need to ask ourselves, insurance companies have all these tools that they do these really fancy models which ended up exiting the market because the risks are too high. Yeah. Can we use those risks to actually to build something useful that actually end up building parametric insurance schemes and other useful stuff my friend Kathy Bauman-McLeod always tells me about, that we can use not just have elegant thoughts about challenges, but elegant solutions that can really target populations that really need help. So the question is, with the 32 trillion that is underwriting some of these risks of the asset owners, for example, you talk about the reinsurers. Yeah. Can we think of ways to help them spend it properly with us so that we can also co-invest more in the prevention infrastructure, not just in risk transfer?
Okay, so let's see if we can get them, as they did in San Francisco after the fire, to help deal with resilience, to prepare for the next disaster in their own self-interest would be one way to go. Let's turn to the private sector. We have with us, of course, Heather. You're now representing JPMorgan. You have a rich history, including in government service in the past. Can you tell us, JPMorgan wants to be a leader in climate finance. Can you tell us what is the role that big banks can play, the financial sector can play in catalyzing the finance we needed? The sums are extraordinary, right? We know, though it has already been said on the stage, $2 trillion went to the clean energy last year, double the amount perhaps that went to oil and gas capex, which is the first time we've seen sums along those lines. The estimates needed by the end of this decade are between 4 and 6 trillion per annum needed for the energy transition to continue on pace. Most of it in the developing world, where it's actually quite hard to get the finance down to the projects that are needed. So what bright ideas does JPMorgan have in this area?
Absolutely. I mean, look, bottom line is we see tremendous opportunity on the investment space. And as Lord Turner was talking about, there's so much exciting momentum behind clean energy technologies. His comments about solar and solar plus storage, I think, are spot on, which is why we as JPMorgan Chase have set a goal of investing $1 trillion in green by 2030. We're on track to meet that goal. But again, for a huge, large financial institution, it kind of boils down to an opportunity. When you're thinking about reducing emissions reductions, it's about innovation and it's about infrastructure. And those are two things that, as our firm does, we do incredibly well. When you think about just the infrastructure piece of this, we've funded some of the largest infrastructure projects in the world. I'm really excited about the fact that in the last 20 years, JPMorgan Chase has funded 1 in every 5 gigawatts of solar plus storage in the United States. So those are the kinds of innovative opportunities that we see out there. And, I think the opportunity is here. The opportunity is only going to continue to grow. So it's very much a part of how we think about our future.
So $1 trillion is a lot of money. A trillion here, a trillion there. Pretty soon it's real money, to use an old American expression, political expression. Will some of that be nuclear? There is a nuclear renaissance in the making, and we've traditionally not seen Wall Street get involved with nuclear just because of the poor economics historically in the West the last 30 years. Although China's building less nuclear plants, it's on a different economic model. I hear some rumblings your bank is thinking about supporting nuclear.
Yeah, absolutely. I mean, and rumblings are a good thing. But to your point, there are a lot of pieces of this puzzle getting alignment between the public and private sector, figuring out where those opportunities lie. The conversation happening, in particular in the U.S. right now, around how are we going to deal with the energy demand from AI is really, I think, facilitating this new renaissance and discussion around what is the role of nuclear as we need significant amounts of baseload power in a very quick and accessible manner. So those are good conversations. But again, I think what part of the challenge here is that the one bank alone can't solve all of the challenges. It was really going to take, the thought leadership of, communities, different businesses, end users, and governments to kind of come together and find a thoughtful solution to some of the existing challenges, as you point out.
And just one other point before we come to our renewables guru on our panel here. Of that $1 trillion we're talking about, one of the gaps that's identified with clean energy financing is the so-called scale-up capital, getting from N of 1 to N of 10 with projects. With software companies, it's pretty easy to get an exit for your venture capital investment. But when your first pilot is 100 million or more, and trying to find for small modular reactors or for hot rocks geothermal or any of a variety of less glamorous but very important climate tech companies that are in the offing. And Lord Turner talked about how technology has advanced much more quickly than he anticipated, and many people had.
Exactly.
There's a lot of these coming out of the hopper. But many companies that I speak with tell me, and I was just in Silicon Valley last week, that it's very, very hard to get sort of that missing middle, bridging that gap. Traditionally, companies like yours have been happy to come along once the tech is proved out and you can just do project finance, cookie cutter, no tech risk. Sure, we're happy to finance yours. It took solar 15, 20 years to get to the point where companies like yours would finance it, and the early risk capital had to come from elsewhere. What's different now? Because that model is not fit for purpose for the urgency of this
Exactly. And I think that gets, I mentioned infrastructure and innovation. Innovation is key part of it. And part of that is really thinking strategically about what are the resources we need within the firm to help guide the decision-making process, to think through and understand the technologies, to think through what are the different financing tools that we can bring to some of these challenges. So we've been very focused on, how do we build that team within the firm? How do we make sure that we're, at the bleeding edge of new opportunities in the climate tech space? I'm not going to say we've figured it out overnight. I think it's going to be a journey, but I think we view that as a very important part of our broader investment portfolio and something we're going to continue to invest in.
You're still working on it. We
Yes.
don't have
I can't tell you we've solved it yet, but yeah.
We're gonna keep your feet to the fire on that. Okay, let's come to Chris. You're a renewable energy guy. Obviously, we've heard solar and batteries touted a lot. Wind has been discussed, but give us the broader overview. Where do you see the financing piece of this, which is what our panel is meant to be talking about, coming in on this? Have we sorted it out that no subsidies needed? It's the cheapest way to make power, I hear. PV. It's so cheap the Germans are using it as fencing. It's cheaper than buying fencing in Germany. Just put up solar panels as your fence. Or is the picture a little more complicated than that?
It's definitely more complicated. The costs have come down, as Lord Turner has mentioned, over the last 5 and 10 years, and it's becoming competitive now. I mean, it's really something that's a viable option for the industry to invest in. Challenge is as our panelists have mentioned, that it's got to be resilient, and we take a proactive approach towards risk management to really understand the exposures that are presented by these assets. The OEMs and the manufacturers are racing to keep up with the growth and the pace of change that's been happening, and that's evolving the risk landscape that we see across the board. And at FM, we take a science and research-based approach to understanding risk. So not only understanding what can happen, but if it does happen, how bad is it going to be? And using that information and bringing it up front into the early stages, the incipient stages of these projects, to work with the financiers and the developers and the owners to make sure that all different angles of risk are represented at the table, and they understand not only the finance risk, but the business risks and the property risks. It's really important to make sure that we're bringing this to the tables to ensure long-term resiliency and reliability in these assets.
Now, you're launching your business in Europe today, if I'm not mistaken.
That is correct. This follows a successful launch in 2024 for U.S. and Canada, and as of today, our all-risk property insurance policy is available in EMEA, Europe,
these are very different markets, obviously, particularly in terms of regulatory outlook and policy. If you look at a place like Texas, it's Wild West, right? There's no capacity market. It's basically driven in the ERCOT, as they call it, the grid there. Price spikes are really what drives the penetration of solar, of batteries, which are going gangbusters. The number one state in America for those kinds of solar and batteries is Texas, not even California now, which is a deep, deep red state, as everyone knows. And here you have almost the opposite environment, right? And so how are what you're offering relevant? What kind of risks are you trying to help people with here? Give us a real quick insight into what we can turn to you for.
Here, there is a huge regulatory hurdle in certain areas, and that's why Texas has been very progressive in that sense. It's a lot easier to make.
No one's ever put those two words together before, by the way. Yeah, but go on.
It's a lot easier to connect to the grid in Texas, and that's one of the challenges that we have here. And really, what we want to do is we want to work with the financiers, work with the investors, to bring resilience into these projects. We've done a global study of your peers, 250 financiers involved in renewable energy and 450 or 400 in the renewable energy space. And many on the finance side, they look at the resiliency, level of resiliency, and they use that to basically value the project. So if you've got more resilience, you're going to receive a better valuation. Many of the respondents also looked at it in terms of just making investments outright. So ensuring that we've got resiliency and reliability built into the projects from the upfront, and we're collaborating with everybody, bringing everyone together, is going to help generate investment, is going to help your projects, is going to help build confidence in what's being constructed. I mean, we want to be building renewable energy.
Yeah.
We want to make sure that it's there for the long term. What's sustainable energy if it's not really sustainable and it breaks down?
There's a question that's come in from the floor on the Slido, and I'll put this to any of you that wants to answer. Maybe Bernice, since you brought up insurance, it's about insurers being more transparent with their risk assessments of insured assets. to help build up a better understanding. Seems almost like motherhood and apple pie. Who would be against transparency? But I imagine it's a little more complicated than that. Are there competitive factors, or what's the reason we don't have more transparency, do you think, Bernice?
Well, I think, first of all, it's partly because they do charge. So therefore, it's a business model question. But at the same time, we are beginning to see some reinsurers, especially, being much more honest about the materiality of the risks. At the same time, I mean, look, we talked about the US. We are obviously looking at this sector becoming very politicized very quickly, very soon. It will be the next big climate political frontier because it's about who you insure, whether the state should come in or not. Some state in Italy now, for example, is talking about compulsory insurance. We will see more and more in different parts of the world where they're uninsurable.
Right.
Who to insure, who would be inside the tent, who's not outside the tent,
Right.
how much state should be inside it. That will be the next political frontier. So in some sense, I mean, it's an excellent question, but I believe that if, for example, insurers could be more honest about, or more open, sorry, honest is not the right word, sorry, insurers, more open about the specific risk assessments, then it will encourage a different type of debate in the world, perhaps.
Well, you make a good point about the politics of it, but we've already seen as insurers have retreated from hurricane-prone zones in Florida, for example, the state of Florida has been the backstop, right? So rather than move Granny out of the way of the next hurricane, because Granny doesn't want to move, the taxpayer is subsidizing her to stay in harm's way, which is a perverse outcome, but that's what's going on. We may well see this in California. The cost estimates, direct cost estimates, 25 to 50 billion to rebuild, but in fact, more likely 500 billion is a potential larger scale cost, which will not be borne by insurers. They're already fighting it tooth and nail. They're claiming they'll go bust or they won't have any money for the next disaster, for which there's some truth. So we're likely to see these losses socialized, de facto state insurance.
Absolutely. And also we are now seeing, I just read a report last week, I think from National Insurer, some kind of association, sorry, again, if you're in the room, that we are looking at the 2008 type financial crisis percentage triggered by the uninsurability of some of the properties.
Right.
So we're talking, I mean, in fact, the central banker earlier already warned us of this sort of matter.
She did. I can see her chuckling over there saying, I told you so. This is our jobs. And perhaps she is right indeed, even though I gave her a hard time. With that, our time is up. I'm going to ask you all to thank my panelists for a wonderful intervention.